Hey guys, ever wondered why our banks, investment firms, insurance companies are closely watched by the government? Why can't they just do anything with their money? Well, that's because of financial regulation. It's what keeps our banks, financial system safe, stable, and fair. Let's talk about it in 10 fact facts. Fact number 1. Financial regulation is the system of rules, laws, and policies that guides how our financial institutions operate. It's there to make sure our money stays protected and the economy remains steady. Fact number 2. The main goal of financial regulation is stability. It prevents financial crisis, protects consumers, and keeps the trust in our banking system strong. Fact number 3. It controls who can enter the financial system. Only qualified and trusted institutions can operate as banks, insurance companies, or investment firms. That means no random or shady players. Fact number 4. Financial regulators require accurate and transparent reporting. Banks and firms must regularly submit reports to prove that they are following the rules. Transparency builds trust. Fact number 5. Financial regulation also limits what banks can do with their assets and activities. It prevents them from taking too many risks and could lead to huge losses. Fact number 6. Depositors are protected by deposit insurance through the PDIC or Philippine Deposit Insurance Corporation. If your bank fails, your deposits up to 1 million pesos are still safe. Fact number 7. In the Philippines, financial regulation is mainly handled by the Bangko Sentral or BSB for banks, the Securities and Exchange Commission or SEC for investments, and the Insurance Commission for insurance companies. Together, they keep our system running smoothly. Fact number 8. One big part of regulation is increasing information for investors. It helps avoid unfair situations where only one side knows all the facts, what we call asymmetric information. Fact number 9. Financial regulation gives the government control and oversight over how money flows in the economy. The BSA manages liquidity, interest rates, and the supply of money to keep inflation under control. Fact number 10. And finally, financial regulation promotes trust, fairness, and confidence. When people know their money is protected, they are more willing to invest, save, and help grow the economy. So yeah, financial regulation isn't just about strict rules. It's keeping your money safe, your bank stable, and our economy strong.
Hey everyone! Have you ever wondered who helps the Philippines government manage its money and keeps our economy in check? Meet the Bangko Sentral ng Pilipinas, the government's financial superhero. Let's check out 10 cool facts about the BSP as a fiscal agent. Fact 1. BSP acts as the government's financial representative. It manages public debt, keeps government deposits safe, and gives advice on financial matters. Basically, it's like the government's personal banker. Fact 2. The BSP is led by the Monetary Board and a governor with 4 sectors. And these 4 sectors are the financial supervision, monetary and economics, currency management, and the monetary services. Fact 3. The monetary and economic sector handles the monetary policy, research, and economic analysis. Sila ang nag-a-adjust para kontrolin ang inflation. Fact 4. The financial supervision sector regulates the bank and other financial institutions, making sure that the banking system stays safe and stable. Fact 5. The currency management sector handles distribution, printing, and retirement of the Philippine money. They even manage medals and commemorative coins. Fact Number 6. The corporate services sector keeps the BSP running smoothly. They manage strategy, AR technology, and human resources. Think of them as the engine room of BSP. Fact number 7. BSP is big on advocacy. They promote microfinance to help small entrepreneurs, fight money laundering, encourage financial inclusion, and improve remittance system for OFWs. Fact number 8. BSP has 8 powerful instruments to keep our economy stable and control money flow. And these are legal reserve requirements, open market operations, collateral control, and discount and rediscount rates, portfolio ceiling, margin requirements for letters of credit, minimum capital ratio, and moral suasion. Fact 9. BSP also stabilizes banking operations by maximizing interest rates, prioritizing bank loans, fixing maturity, examining bank records, and check the integrity of the top executives. They really keep everything under control. And finally, BSP encourages every Filipino to be financially smart, from managing money to securing banks to teaching financial literacy and supporting microeconomics. BSP is at the heart of our economy. So now you know, BSP isn't just our central bank, but it is the heart of the Philippine financial system, managing money, securing banks, and help every Filipino to be financially smart. Stay money wise!
Hey there, future millionaires! Are you scared that your bank might suddenly vanish and take your money with it? Don't you worry! PDIC or Philippine Deposit Insurance Corporation is your financial bodyguard. I'm Ropami Amrento Maputo and I'm going to give you 10 facts of PDIC. PDIC stands for Philippine Deposit Insurance Corporation. Basically, the superhero of your savings. It's the one that makes sure your money doesn't ghost you like your bank does. Fact number 2. The corporation provides the maximum deposit insurance coverage of 1 million pesos per depositor per bank. Fact number 3. Risk mitigation means that PDIC works with financial regulators to keep the bank stable and safe. It tracks the financial health of the banks and to make sure that they follow the rules. Fact number 4. When a bank is ordered closed, PDIC becomes the receiver and the liquidator. It takes over the bank's assets, records, and operations, then liquidates them, selling and distributing the assets to the creditors and to the insured depositors. Fact number 5. The board of directors is primarily responsible for the governance of the corporation. It is in charge of making sure that the organization is well managed to support economic growth. Only individuals with the right experience, education, and competence can be appointed as the member of the board. Fact number 6. The PDIC board includes the Secretary of Finance or the Chairperson, the Governor of the Bangko Sentral ng Pilipinas, the President of the PDIC, and the 4 private sectors. Fact number 7. The board shows the government's commitment to economic growth and financial stability to ensure that PDIC is well run, protect depositors, and strengthens the banking system. Fact number 8. The executive committee, led by the president and composed of sector heads, advises on policies, plans, and programs. Fact number 9. The management committee, also chaired by the president, includes vice presidents and higher officers who communicate and implement corporate decisions to ensure smooth operations within the PDIC. And lastly, PDIC covers valid deposit and member banks, including by deposit type, by deposit account, and by KRC. So remember, savers, when your bank is PDIC insured, you're not just saving money, you're saving smart. Trust PDIC, your ultimate money saver.
Hey guys, ever thought about what happens to your money if your bank account suddenly closed?
Oh no!
Don't worry, that's where the PDIC, the Philippine Deposit Insurance Corporation, steps in. Today, we'll uncover the 10 important facts about what's not covered, unsafe practices, and how to file a claim. Number 1. Not everything in a bank is insured by the PDIC. Investment products like bonds, securities, and trust accounts are not covered. PDIC only insures legit deposit accounts like savings, time deposits, and checking accounts. Fact number 2. Deposits that are unfunded, fictitious, or fraudulent are not covered by the PDIC. In short, fake or illegal accounts don't get insurance or protection. Fact number 3. PDIC also includes deposits that come from unsafe or unsound banking practices or proceeds of unlawful activities under the Anti-Money Laundering Act. Fact number 4. So what counts as unsafe or unsound banking practices? One example is accepting deposit outside the bank premises without the Banco Central ng Pilipinas authority. Fact number 5. Another unsafe practice is not verify a depositor's identity or not requiring proper documents without opening an account. IC requires to follow strict ID and paperwork rules. Fact number 6. It's also unsafe for a bank to let customers deposit, withdraw, or transfer funds without proper fill-out deposit or withdrawal forms. Every transaction must be documented. Fact number 7. Offering very high interest rates when a bank already have negative capital or low liquidity is a big red flag. PDIC considers that unsafe banking practices too. Fact number 8. When a bank closes, creditors and depositors must file their claims against the assets of that bank within 6 days from the publication of the closure notice. Fact number 9. Claims must be in writing using the PDIC claims form and supported by the data like statement of accounts, billing statements, promissory note, or proof of deposit. PDIC validates these documents carefully. Fact number 10. If your claim is incomplete, PDIC will issue a notice of deficiency and give you 15 working days to submit missing documents. Claims filed after 60 days are automatically disallowed, but you can request a reconsideration or appeal within another 60 days. That's it. 10 facts about PDIC coverage and claims. PDIC protects depositors but also promotes safe banking and accountability. Next time you open an account, make sure it's legit because PDIC protects only work when you do things right. Don't forget to be financially smart.
Hi everyone, I'll be sharing 10 interesting facts about Securities and Exchange Commission. This facts cover its history, vision, mission, powers and function, and its organizational charts. Basically, we'll get to know what the SEC does and why it's important in regulating financial activities in our country. Fact number 1. Did you know that the Securities and Exchange Commission was created on October 26, 1936 under Commonwealth Act number 83 to regulate the securities market and protect investors? Fact number 2. During the Japanese occupation, the SEC was abolished but later reactivated in 1947 when the Commonwealth government was restored. Fact number 3. In 1981, the SEC was expanded with 2 additional commissions and new departments for prosecution, enforcement, supervision, and monitoring. Fact number 4. On December 1, 2000, the SEC was reorganized under Republic Act number 8799, also known as the Securities Regulation Code, strengthening its regulatory powers. Fact number 5. The mission of the SEC is to be the champion of investor protection and the progressive overseer of an inclusive and secure capital market in the Asian and Asia-Pacific region. Fact number 6. The mission of the SEC is to develop and regulate the capital market and company registration, promote good governance, and empower investor entrepreneurs. Fact number 7. The SEC upholds the core values of integrity, professionalism, accountability, independence, initiative, and teamwork. Fact number 8. The SEC's power and functions include supervising all corporations approving or revoking registration, investigating violations, issuing cease and desist orders, and enforcing securities law. Fact number 9. It also has the power to impose sanctions, formulate policies, and coordinate with other government and private agencies to ensure fair and transparent markets. Fact number 10. The organizational chart of the SEC is headed by a chairperson and 4 commissioners, supported by departments like company registration, corporate governance and finance, market and securities regulation, enforcement and investor protection. That's a wrap of our facts about the Securities and Exchange Commission. I hope you have now a better understanding of the SEC's vital role in protecting investors and regulating our financial markets.
Hi, did you know that the Securities and Exchange Commission has its mandate and it is derived from its fundamental role as a corporate registrar and a market regulator, continually shaped by new legislation? Hi, this is Iggy Villas and this is my part regarding the Securities and Exchange Commission mandate down to its subsequent laws and provisions. There are subsequent laws applied to the SEC's mandate, and the key laws that have broadened or reshaped the SEC's mandate include the Presidential Decree No. 902A or the SEC Reorganization Act, Batas Pabansa bilang 68 or the Corporation Code of the Philippines, Republic Act No. 8799 or the Securities Regulation Code, and lastly, Republic Act No. 11232 or the Revised Corporation Code. But did you know that there is a primary subsequent law that has fundamentally changed the landscape of FIIs for the foreign institutional investors in India? It was the introduction of the FPI or the Foreign Portfolio Investor Regime under the Securities and Exchange Board of India or the SEBI Regulations 2014. This law effectively merged and simplified the 2 earlier foreign investment categories, the foreign institutional investments and the qualified foreign investments, into one single comprehensive FPI category. What was its impact? The new regime's impact eased registration, simplified compliance, and created a risk-based classification system for the foreign investors, replacing many of the section-specific rules that were previously applied to the FIIs. There are also provisions provided for the foreign institutional investors, and the list of sections provided, namely Sections 3, 8.1, 9.1, 10.1, 11.1, 16, 17, and 17.2. This appears to reference specific provisions regarding foreign institutional investors found in regulatory frameworks, most notably those issued by the Securities and Exchange Board of India or subsequent financial legislation in a country like India. Section 3, Application for Registration, outlines the mandatory requirements for any institution established outside India to apply for registration with regulatory body like SEBI before investing in a local securities market. Section 8.1, Eligibility Criteria, details the requirements an applicant must satisfy to be eligible for registration as an FII, often covering institutional nature, track record, and financial soundness. Section 9.1, Investment Conditions Restrictions, specifies the types of securities FIIs are permitted to invest in, like shares, debentures, units of mutual funds, and the routes available, like primary or secondary markets. Section 10.1, Operational Requirements or Limits, contains a detailed list of conditions and restrictions for FII operations, such as maximum investment limits, prohibition on specific activities like short selling, and custody and reporting requirements. Section 11, Fit and Proper Person Criteria, ensures that the FII, its directors, and key personnel meet standards of integrity, reputation, and financial competency. Section 16, Appointment of Domestic Custodian, mandates the FII to appoint a local custodian to hold securities and monitor or report transactions to the regulator on their behalf. This is a critical oversight mechanism. Section 17 and 17.2, Suspension or Cancellation, outlines the grounds and procedures under the regulator can suspend or cancel an FII registration, such as violation of the acts or regulations, failure to pay fees, or submission of false information. Note that the FII category has been largely replaced and consolidated into the FPI regime in many jurisdictions like India, which simplifies and streamlines the entire process. Thank you.
Now that we've learned about the other key financial regulators, let's move on to another important one, the Insurance Commission, or simply IC. The Insurance Commission plays a vital role in protecting Filipinos through the supervision of insurance, pre-need, and health maintenance organizations. Hi, I am Serengate P. Maturan, and now let's explore 10 interesting facts about the Insurance Commission, its history, mandate, objectives, and functions, and see how it helps keep our financial systems safe and secure. Number 1. Insurance didn't exist during the pre-Hispanic era. Back then, Filipinos lived in small tribes and helped each other when problems happened. There were no insurance companies, and people just supported one another when someone got sick, lost something, or passed away. Number 2. The Spaniards introduced insurance to the Philippines. When the Spaniards came, they brought the idea of insurance through Lloyd's of London, a big insurance company from England. This is how insurance first started in our country. Number 3. The government made laws to regulate insurance. As insurance became more common, the government created rules to make sure companies were fair and honest, and that people's money and trust were protected. Number 4. The Pre-Need Code gave the IC, or the Insurance Commission, more power. In 2009, a law called the Pre-Need Code allowed the Insurance Commission to watch over companies that sell pre-need plans like educational, memorial, or pension plans so people's investments would be safe. Number 5. The Insurance Code was updated in 2013. President Benigno Aquino III signed a law in 2013 that made insurance companies increase their capital or funds. This ensures they can always pay their clients when accidents or losses happen. Number 6. The Insurance Commission's main job is to supervise insurance companies. The Insurance Commission makes sure insurance companies, pre-need companies, and health maintenance organizations, or HMOs, follow the law and treat their customers properly. Number 7. The Insurance Commission wants to protect people and promote growth. The Insurance Commission helps the insurance industry grow, but also makes sure people are not cheated. It teaches the public to be aware of their rights when buying insurance or pre-need plans. Number 8. The Insurance Commission gives licenses to companies and agents. Before anyone can sell insurance, they must get a license from the Insurance Commission, or IC. This helps make sure that only trained and trustworthy people can offer insurance to the public. Number 9. The Insurance Commission checks if companies are financially healthy. The Insurance Commission reviews company reports and records to see if they have enough money to pay claims. If not, the Insurance Commission can take action to protect the customers. And lastly, number 10, the Insurance Commission protects every Filipino's financial safety. The Insurance Commission's biggest goal is to make sure every Filipino feels secure, whether they're buying insurance, a pre-need plan, or a health policy, by ensuring companies are honest, stable, and reliable. From its historical roots to its modern-day mission, the Insurance Commission continues to keep the Philippine insurance industry strong and secure for you, for me, and for every Filipino family.
Next
Next is regulated entities. First is life and non-life insurance companies. These are companies that provide insurance protection. Life insurers covers risks related to death or survival, while non-life insurers covers property, casualty, and liability risks such as fire, car, or travel insurance. Second is pre-need companies. They offer prepaid plans for future needs such as education, memorial, and or pension benefits, which are paid in advance through regular installments. Third is healthcare maintenance organizations, or HMOs. HMOs provide healthcare services to members for a fixed fee, covering medical consultations, hospitalizations, and treatments through accredited healthcare providers. Fourth is mutual benefits associations, or MBAs. MBAs, these are the non-profit organizations that provide insurance-like benefits, such as death or sickness benefits, to their members funded by member contributions. Fifth is accredited actuaries. Actuaries are certified professionals who use mathematics and statistics to evaluate financial risk, ensuring that insurance products and companies remain financially sound. Sixth is brokers insurance. Brokers are independent intermediaries who help clients find and buy the most suitable insurance policies for various companies. Seventh is resident agent. Resident agents represent foreign insurance companies operating in the country, handling transactions and ensuring compliance with local regulations. Eighth is insurance adjusters. Adjusters are professionals who investigate and assess insurance claims, determining the extent of loss or damage and the amount payable under the policy. And finally, we have organizational structure of Insurance Commission. As of April 24, 2018, the Insurance Commission is headed by the Office of Insurance Commissioner, assisted by several Deputy Insurance Commissioners overseeing key functional areas. The first is Deputy Insurance Commissioner of Financial Examination. This office oversees the financial soundness and stability of insurance companies. It ensures that insurers comply with financial regulations, maintain adequate capital, and protect policyholders' funds. And under this are the Office of Directors for Financial Examination, Non-Life Division, Life, MBA, and Trust Division, Pre-need Division, Brokers and Insurance Pool Division, Health Maintenance Organization Division, Anti-Money Laundering and Corporate Governance Division, and Micro Insurance Division. Second is the Deputy Insurance Commissioner of Technical Services. This office handles the technical and analytical aspects of insurance operations. It deals with actuarial evaluation, investment reviews, and statistical research to guide regulatory decisions to ensure fair pricing and risk management. And under these are the Office of Directors for Technical Services, Actuarial Division, Investment Service Division, Rating Division, Reinsurance Division, Statistics and Research Division. Third is the Deputy Insurance Commissioner of Legal Services. This office manages all legal and regulatory affairs of the Commission. It enforces insurance laws, handles licensing and mediation, prosecutes violations, and resolves disputes between insurers and policyholders. And under these are the Office of Directors of Legal Services, Regulation, Enforcement, and Prosecution Division, Public Assistance and Mediation Division, Conservatorship, Receivership and Liquidation Division, and Claims Education Division. And fourth is the Deputy Insurance Commissioner of Management Support Services. This office provides administrative and operational support to the whole Commission. It covers human resources, budgeting, accounting, IT, and planning, ensuring the agency runs efficiently. And under these are the Office of the Directors for the Management Support Services, Administrative Division, Human Resource Division, Budget Division, Accounting Division, Information Technology Division, Information System Division, Planning and Management Division. And there are supporting offices of Internal Audit Division District Office in Baguio District, Cebu District, and Davao District. That's all. Thank you.